Welcome back to the Brent Bruce Daily, where each day we take a look and see what is going on with the markets, the stock market, the bond market, and also the mortgage-backed security market to see how things are going and what that is doing to home loan interest rates. So this is where you're going to be able to find out what happened with home loan interest rates real time as of today and why that happened. And you'll begin to learn and understand what causes these movements. So far today, let's take a look at what's going on. The stock market has really been getting beat up this week, currently down 500 points. At one point down as much as 700 points today, still really reeling from the news that came out from the Federal Reserve about them raising the federal funds rate, and really the notes that were just saying, hey, we're not really sure of how hard it's going to be to get inflation under control, pushing up their expectations of the federal funds rate going all the way up to 4.6% possibly in 2023. And as we've seen so far, I think that might even be something that could change as the numbers come in and possibly even have to go up higher. Let's take a look and see how the mortgage-backed security market is doing. We'll run over here to our friends at MBS Highway. We're down 8 basis points here today, but keep in mind that overall, the shift that we had from the beginning of the week to where we are now, we had a swing by as much as, at the most, 180 points down this week. So that is a very big swing. At this point, if we landed about down 8, we're probably going to end up being down 130 basis points for the week, which, with the news that came out and that we got from the Federal Reserve, really just making the markets feel like they just don't have inflation under control. I'm actually pretty surprised that we didn't see a larger change. Now, let's take a look and see what actually that is doing to home loan interest rates, because ultimately that's what we want to know. We're going to take a look at the Brent Bruce Daily scenario here, which again is our very well-qualified client with 800 FICO score, 25% down. I'm going to open this up and show you all the details of this scenario so you can take a look at it. Let's go ahead and jump back over to California, kind of go back and forth. Tennessee and California pricing is the same with me, but just so that you see these numbers, I'm going to run this scenario. Let's get a county in here. Rancho Cucamonga, 91730 is San Bernardino County. And let's take a look and see where interest rates are landing at the end of the week after such volatility and big news from the Federal Reserve. Okay, so we are at 6.5% with a very small credit. Now, I want to again point out, yes, this is the actual interest rate, and this is the actual points that I will charge to a client. There is not anything else that I'm asking for. If your lender is telling you that these rates are not realistic, have your lender call me, because I will show them that these are the real numbers. They're just way lower than what they're offering. So if we open this up here, it looks like if they were to pay a point, if client pays a point, they're at about 5.99. So still able to get a hold of those fives. It's still in the range. But if you want to just go with the no point option, 6.5%. Now, we started the week off. Understand, we started the week off at 6.375. So why is it only an 1/8 of a percent difference with such a volatile market and really 130 basis point drop? Well, this goes to show, like I was talking about earlier in the week, that the banks were hedging their bets. They were making the rates a little bit higher on Monday and Tuesday because they were not sure what was going to happen on Wednesday. So they didn't want to have some sort of surprise end up eating into their profits. So they went ahead and pushed up their interest rates, expecting, or anticipating that maybe the numbers were going to come out a little bit different. The numbers came out the same. They raised the federal funds rate by 0.75%, 75 basis points. It's the comments that made everyone feel uncomfortable and why we experienced the volatility. Next week, we're going to be looking out for our personal consumption expenditure numbers that are going to be coming out. Those will also be market moving. Make sure that you pay attention each day to the Brent Bruce Daily. Like, subscribe, and share to make sure that you don't miss anything as I put more information out on my YouTube channel than just what I put out here on the Brent Bruce Daily that comes through BombBomb. So make sure that you are on both of those. Have a great weekend, and I will keep you posted next week.